May profits be upon you. Welcome to another weekly market forecast. We're looking at gold. Gold has been crazy as of last week. I mean, actually, it was a little crazy before that because it started to move in a parabolic way back in, 2 years ago. Just about 2 years ago, yeah. I mean, for look at it. Look at how it's been since 2023. Shoo, shoo. When the market was at 2512, say 2500, you know, people had their regular kind of interest in it and, almost casual. And then it started taking off and more people want to start getting in. And what does the market do? When everybody's catching FOMO, it flushes out those latecomers, the long, the people with longs, it flushes them out. All right, but in we're looking at the monthly time frame right now. Matter of fact, let me give you a close up. All right, and flush them out, and I just want you to see that this move, this bullish parabolic move, is not broken. This uptrend is not broken just because it we had a pullback here. This here is an opportunity, folks. That's what that is. Hey, look, I want to see. I want to show you something. I want to see you something. I want to show you something. All right. This is the quarterly view. All right. 3 months. All right. Every candle is worth 3 months. All right. And what am I looking for? Fair value gaps. Why? Because that shows your order flow. All right. And from this fair value gap here, it was never revisited. It price didn't come back to it. It's a breakaway gap. All right. Then we have this one from here to here. All right. This is the latest one. Price has not come back to visit that one either. Now, I want you to see that I combined the one from here to the one from here. All right. And we got this blue dotted line. Why am I showing you all of this? Because I want you to see that when the market doesn't come back to mitigate fair value gaps, it's because the intent is to move price higher. It shows the motivation, the that momentum is to the upside, and you can see how strong it is by the fact that it has not you know stair stepped. What am I doing here? That's interesting. That I don't want to make those lines like that, but that it's stair stepping, higher high, higher low. This is what you would normally see, right? Higher high, higher low. It's just going. Pew, pew, pew. It's not pulling back into uh, a internal liquidity. It's not pulling into an internal range liquidity. It's just hitting an external range, one after the other. But now we have this pullback. Some people are thinking it may be a reversal, the sign that the bull run is over and the bear run is about to begin. No, you don't do that until you see a break of market structure going the opposite way. All right, let's go to the monthly. Back to the monthly. All right, this is that area I was just talking to you about. All right, and I have it with the dotted lines here. This is a quarterly fair value gap, and the market is pulling back towards it. And there is a chance that we may pull back into it. There's a chance. There's a chance. All right, because this is the closest internal range liquidity, and it would make sense for a healthy um, uptrend to dip back from external range liquidity to internal range liquidity and then back to external range liquidity. I don't know if we're going to see that because there's some things going on within this candle that make me think maybe the market uh, has had a knee jerk reaction to Trump appointing, not appointing, but nominating Kevin Walsh for the Fed chair position, and the market saw it as a hawkish nomination, and they think that Kevin Walsh would would be driven by the data only in regulating the interest rates as opposed to bending to the will of the president. So it seems as a hawkish move rather than a dovish move. And although he's suggested that his viewpoints on the interest rate decision, to raise interest rate, is leaning more towards pro than con, but his reputation is a hawkish one nonetheless. All right, so okay, if I can, how do I? There you go. All right, let me see if I can get this back. There you go. All right, and so right now we're still bullish. Nothing has broken that bullish trend. If we go to the weekly, what you can see is this opposing candle here, like I had shown on this on the silver chart. There's a chance that the market may want to come down, mitigate this order block here, uh, and specifically highlighting this down close candle, the opposing candle, that we may find support here and then come up higher. There is also a gap. If I can get a close up of that, up there you go, right there. You can see this gap here, and a lot of times the market will come down, touch that, and push off. Maybe we get a wick through it to the order block itself, and maybe we get that bullish break of market structure that will signal to us that this pullback is over and that we can get back to the business of this uptrend, and we can take a move higher from there. All right. So we have the bullish fair value gap on the weekly as a draw on liquidity, as a possible draw on liquidity. All right. If we go up here to the daily, let's take a closer look at that, shall we? If we go here, we can see that there is the down close candles, all right, which will show us this order block here, and that look how close we are to that order block. There's a smaller one here, all right, with a liquidity low to it. Uh, uh, this one respected a that low, and then the move up was in respect to the fair value gap that was right up under it. Price tapped into that fair value gap and moved up higher. So, does price need to come down here? No, it doesn't need to come down there because it's in a fair value gap. That's what stopped that pullback. It's in a fair value gap now. A two candle pullback into a fair value gap and then a move away is what I am, normally expecting. But this was a parabolic move, and uh, and this harsh rebuke, this harsh move down, I can see the market may want to consolidate here for a minute before resuming the uptrend. If it's a downtrend, if the market is reversing and going to cause a downtrend, we're going to see something. We're going to see signs. First, I'm looking for this, the wick, the 50% of this wick. I want to see the market keep candle bodies above the 50% of that wick on the daily, in order to look for signs that the market is going to resume that uptrend. Got it? Once we see bodies closing below the 50% of this wick, I think there's a fair chance that this fair value gap will be violated, and we will come down and mitigate this order block down here. Boom, boom, boom. And maybe the market will find support here for higher prices. All right, but we're not going to. I'm not going to short into this fair value gap. I'm not going to short into this the 50% of this wick. I'm not going to short into this order block. I'm just not going to do it. All right. I I lean more towards buys in gold and the indices because they are designed to go higher. All right. Counter trend trades are lower probability. You can take them if you want to. There's always opportunities for those that want to scalp. You can scalp any move up or down. It doesn't matter what the market structure is. I'm not doing that. I'm going to go with the trend. The trend is your friend. I'm waiting for the market to show me that this pullback is over. And the only way I'm going to know it's over is if it makes a lower low, and then a higher high, breaking that previous lower low and lower high and continuing up higher. Again, let me illustrate it a little better than that. Lower low, lower high, lower low, lower high. I'm looking for this move, a lower low and then a higher high. All right, that's going to signal to me that the pullback is over. Then I wait for the market to pull back within this bullish leg and I'm going to look on the lower time frames for fair value gaps and order blocks for it to find support, and then I can take the move up from there. That's it. This is how I've been trading for the last few years, period. All right. So that's what I'm looking for over here. If the market intends to go lower, you'll see it break. It'll break. It won't respect the discount arrays. All right. And look at this from this low to this high. We put it on the Fibonacci retracement tool. You can see it hit the OTE levels perfectly in the middle. 705, the 705 fib, in between the 618 and the 786. Any one of these is an OTE level. It went right smack dab in the middle. So does it really need to come lower than this low? I don't think so. I think the probabilities are that I think it's going to there are high probabilities that it'll find support before going lower and continue up higher after a period of some accumulation. All right, so that's what I'm looking for. If it doesn't happen, it doesn't happen. I'm just keeping my eye out for it. In a market like this, as volatile as this move was, you can't. There's no sure thing, so you look for signs. Right? You look for signs and you be sensible. Don't jump into anything. All right. Going to the 4 hour, it's not a whole lot of information to glean from the 4 hour. All right. You can see that the market took a hard drop. Boom, 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 boom. And here is the 50% of this Friday wick here, the last 4 hours. That was a good wick, and the market closed the last 4 hours above that wick. I don't want to see a body close below the 50% of that wick, because if it does, then we're heading towards this low, and quite possibly this low. And you know what's laying under this? This is that this is um, the big three three quarter, it's a 1 quarter fair value gap that if the market makes it down there, I'm pretty sure it's going to find support for higher prices. But hopefully we don't have to go that far to find that kind of support. Hopefully. But these are the things that we're going to look for first. Am I going to short this? Am I going to short that? If it breaks that low, if it breaks the fair value gap here and the order block here, if it breaks into those, I'm not taking shorts into that. All right, I'll just move on to another asset until it finds support for higher prices, because I believe the uptrend is still intact and there's no reason, all the reasons that caused the market to make this parabolic move, all the reasons are still in place. That's it. the industrial needs, right? The geopolitical tensions around the world. Um, I mean, there's the need for this precious metal, and it is still there. Nothing changed other than the nomination for this Fed chair. So I'm looking at this as a very temporary knee-jerk reaction by the markets. Hey, we're glad he's putting in place somebody that has a reputation for being sensible and very measured and independent. So we'll see. All right, that's where I'm at. All right, now I already put out a couple of videos already for silver right before this one and a U.S. dollar index analysis. I put that out yesterday. Go check out this one. Right behind this, I'll have the Euro USD, and you definitely want to check that out. And I'll have the S&P after that. So make sure you check those out. And thank you for joining me. Leave a comment in the comment section. Let me know if this analysis helps you out throughout the week. I like to hear from people that say, "Yeah, this analysis worked out for me. I'm glad I took it," or this made no sense for these reasons. That. All right, just let me know. All right, and don't forget to leave the like and the boost button. Hit that boost button. Okay, I'll see you in the next video. Thank you for watching. May profits be upon you.